All right, guys. Bruce back at you with targeted wealth creation. I'm here to do GDX and GDXY. Let's jump in. All right. So we've got 3382 down barely 0.06 of a percent. Not much of a move down. And what did GDXY do? 0.05 of a percent, right? Keeps winning that battle of going down less and going up more. So that's oh, 2 days in a row of going down less, and the one day that GDX went up slightly higher. Okay, so no trades, although, oh yeah, the count is still the same, 325,000 shares. Well, that will start trading higher when it starts breaking out. All right, so nothing else really to see there. How's our cash? Not much change, 19,000, and just moving things around on the treasuries. Let's take a look at our synthetic, even though new trades weren't put on. So last we knew we had a 641,000. I don't always update these, but I always update it in holdings. So we are at, let's make sure that one is updated, 33. Nope, need to update that one. Nope, that one's updated. And so let's try 5 and see what happens. Nope, so 4 was it. All done. All right, so 1872 and 3382. Where are we on the weeklies? Well, we're 2% away, but we also only have 2 trading days. Close to running past this weekly, closely written weeklies. That was the previous. No, that's actually tomorrow. Yeah, so we moved up quickly and then turned around and moved back. So it's been less of a problem. But we've captured almost 75% of the 63,000 that we wrote these total calls for, right? The last time we added 40 more calls at 34.50 on top of our 17.50. So if you look at this resistance chart, right, this bull flag that's, you got a flagpole, and now you're flying your flag. And it's been up here 1 time, 2 times. So I think once it gets up through 34 into 35, we'll consider that a breakout. And we usually look for a second day confirmation to continue that move. So we're getting closer. Let's see if it happens. It doesn't happen till it happens. All right, so on the weeklies, which is what we looked at. Let's see how it looks in our holdings. So cash positions move around, share count stays the same. How's our synthetic? Well, when you're moving down, your synthetic gets larger, right? Because your call value decreases and your put value increases, right? Those are the yin and yang within call and put, but they're both bullish. So the call goes up as you rise through the strike, and the put goes down. So you bought one of them and sold one of them, so you don't even have to buy back the put, and you can sell your call for a lot more money. That's the how those work to mimic being long the underlying stock. So when we look, we can take a look here at 719 on our current amount, right? And where were we yesterday? Well, we're only 715, and we dropped a hair. And the day before, we were 626. Now, I don't always update these, right? I mean, this is 26, but I do always drag the data over. So we're talking 626 and a 667. So it's kind of trading in a range here. I mean, honestly, GDX moved up a while, but it's been pretty boring the last week or two. It's just got to be the most unloved and unappreciated sector. And again, that's exactly what you want to own as it wakes up, right? And geopolitical, black swan, anything, you know, another banking crisis, which we keep hearing rumblings about. Those are the kinds of things that just send gold up a lot higher. And we're already going to do extremely well. I'm looking for Newmont to do really, really well when they report, you know, third, fourth week of July. So GDX and a lot of those, Anico Metals, there's several Anico had a target raised, I think I mentioned to you guys, and it was trading around 68 last I saw it, and it's got a target now from the analyst of 105. And those analysts just were doing nothing for the longest time. I think they're going to be embarrassed if they don't upgrade an asset that doubles its expected earnings. So, you know, they get in gear when they have to, but they're not jumping out ahead of the curve at all. Okay, so that's what I got here for you. Let's take a look at our payout tab. And we're in that situation there. Let's talk about this. So the big question is, what will they pay you? And when I say that, I mean, I can look at, you know, a different fund with a track record and a history, and I can see what they did in short call income. Like if we were sitting here and this was $2 in short call, and this was 50 cents, both profitable, I'd say there's no doubt they're going to pay $2. But you're in a brand new fund that hasn't paid. You collected $1.07 in total, and then you collected another 63 cents. So right now that's assuming that these 2 days don't run by and we eat a little bit away of the 162,950, right? The synthetic, nothing's going to happen there unless money flows in and they put another trade on, which will take this and give us a few more pennies, right? Because every time we write a synthetic, we make more money on the put, so we're adding to our piggy bank, right? Because we're $4.16 underneath the strike price. So I feel really good knowing they can get there on July 19th, number one. And secondly, I feel really good about the money they've collected. So the real question is, and I've said this, you know, a couple times now, so there's $1.70, so I'm going with 85, I'm taking half, and I'm saying, okay, we're at 1873. I mean, GDX in its volatility index is 30. I mean, but they want it to be paid in a certain range. So on one hand, I'd say, hey, go out and pay $1.70. They're not going to do it. They might pay $1. But my gut says, why not just make it a 54 yield? This is not a 90 or 100. Well, wait till it gets running. It will be, right? When this thing gets hot and the metals are jumping and the miners are flying. I mean, I've seen GDX go up 10%, you know, 30% in a week. So when they have their bullish periods, it can really run, and that's far from what it's done the last month or two. It had a pretty good run when it was creating the flagpole. So that's what I got for you guys. I'm sticking with this 85 because I've learned with the new funds to be conservative. I don't want people to go, oh, you blew that one, even though it's all, you know, I hope I'm under, and I hope somebody goes, hey, you really missed that one. I go, yeah, I was just sandbagging you guys, because everyone's happy. You know, they're expecting 85 and they get $1, so they're happy. But when you tell them it could be 250 and they pay a $37, then they start to think, man, I can't listen to you, even though the logic is always up to the YieldMax people. And I think they want this fund to be successful, and it will be because of the sector it's in and the fact that, you know, you're not chasing the puck where it's been, you're chasing the puck where it's going. And this is definitely in the right sector going forward later this year. All right, guys, so I got 85 cents for you. We'll see what happens. I fully expect them to win this or have to give a little bit of the money back, but it doesn't really change too much here. All right, that's what I got for you. Bruce out. Not a financial advisor. It's not financial advice. It's for fun and entertainment. See you guys. Have a great day ahead. Bye.